we are hosting a training session this evening on filing of tax returns using TAXPRO-MAX. Now, this platform we are using is the meet and chat to the professionals that we use. It's one of the many mediums we use as finance business enthusiasts in intimating, enlightening, and upskilling our community members so that they are aware of the trends or the recent trends in the field of accounting, finance, and other areas, so that they are upskilled and they have the necessary tools in their various roles or to perform in their various roles. Now, the aim of the finance business partners is to change the narrative of the profession, whereby we have as many professionals as possible together in one community, where we share ideas, knowledge, and learn to train ourselves in all rounds or in all aspects. Now, the things we do over the years, we've improved our community members via creative contents such as posts, quizzes, training sessions such as this one, mentorship sessions, as well as a host of many other things that we do on our platforms. Now, in the course of this training session, we'll be giving out our links to our various platforms so that anyone who is interested can join us, and we go on from there as we train ourselves and we make sure that we have the requisite skills to undertake our daily activities in our various roles. Okay, our guest for this evening is Mr. Ajibola Ebenezer. He'll be taking us on filing of tax returns using TAXPRO-MAX. Now, over the years, one of the major areas that Nigeria has really upgraded is the issue of digitization of tax systems. I'm sure you would agree with me that it would have been crude and archaic for us to still have a manual tax filing system whereby the activities that gives rise to this tax or tax payments or remittances are done digitally. We have various accounting softwares now. As technology advances, we've grown from doing things manually, like in those days where we have manual record keeping and the likes. Now we use different softwares and we have cloud-based systems where we record our transactions, and we have an on-the-go system where we can easily have access to our transactions on a daily basis. Now, the tax system in Nigeria too has also been evolving as technology has advanced over the years. The FIRS, which is the sole collector of taxes or the sole administrator of taxes on behalf of the federal government, has modernized the tax system by creating a platform, the TAXPRO-MAX, for ease of access now on the aspect of taxpayers. This conforms with the canon of simplicity and convenience for taxpayers, whereby from the comfort of our homes, we can easily file and remit taxes instead of excessive printing and going about from one place to another, looking for locations of FIRS offices and many other things like that takes time and are heinous before we can file our taxes. With the TAXPRO-MAX platform, which is an on-the-go system for simplified tax filing and remittance, we can easily pay our taxes, file taxes, as well as register for taxes easily from anywhere we are, in as much as we have network connection. So I will give room to Mr. Oyewole Ebenezer to introduce himself and what he will be taking us this evening. Mr. Ebenezer, are you with me?
Good evening. Yes, I'm with you.
Okay, please kindly give us a brief introduction of yourself and what you'll be doing this evening, the aspects of taxes that I will be treating, and what you will be training us on.
Okay. My name is Adile Ebenezer, not Oyewole Ebenezer.
Okay, thank you. Sorry for the mistake.
Yeah, it's fine. So, I'm an auditor. I'm a tax professional at Lawrence Awi & Co. And this evening we'll be, together with the finance business partners, we'll be taking people through how to file annual returns, especially CIT, with the newly introduced, it's no longer new anyways, with the TAXPRO-MAX platform, basically. Then if time permits us, we'll maybe go through how to file withholding tax too. Thank you. Okay. I think that suffices.
Okay. So the TAXPRO-MAX platform was actually introduced on the 7th of June 2021, just as I said earlier, to ease the stress of taxpayers in filing a remittance of taxes. And the body that introduced this platform is the FIRS, the Federal Inland Revenue Service, which is the sole administrator of the taxes that are accrued or accruing to the federal government. So the taxes that I will be looking at this evening, just as Mr. Ebenezer has said, we'll be looking at company income tax, withholding tax, as well as value-added tax in no specific order as time permits. So, okay, I think we have enough participants now. I think we can easily get started while others join us in the course of the session. So as the training commences, we'll post our links to our various communities, WhatsApp, LinkedIn, Instagram, so that anyone who is interested in joining us or continuing with us as a community can easily have access to us. So Mr. Ebenezer, over to you, sir.
Okay. Basically, while we will still wait for people to join, and while I try to connect my PC to this thing as well, I would just like to say that the introduction of the TAXPRO-MAX platform for filing VAT is a very good move, although it has received a lot of criticisms from people, from the users. But to be candid, it's one of the best moves that the FRS can take. I mean, it has eased a lot of forgetting, not looking at all of the flaws and everything, because truly it's still a work in progress. Not looking at all of the flaws, I mean, it actually came with a lot of benefits, to be candid, and I see a very good end to the introduction of the platform, because I see, for instance, a platform that for instance, will allow that for instance, automates the generation of credit notes for withholding taxes, such that as clients, customers are remitting withholding taxes, it is automatically being credited to the beneficiaries' accounts. I'm not sure if that is clear. I don't know if that's clear, but it should be. So yeah, I see a very good end, like I said earlier, to this thing. I mean, and one of the things that I really appreciate about the platform is that it keeps on getting better. It keeps on getting better, because anytime, for instance, this year I can count the number of changes I've seen on the platform already. Just the first day, that was Friday, when I checked the platform again, I realized that, initially the guide they gave to us, they sent to us, they said that at the end of everything, at the end of the whole filing, in the summary, after the summary and everything, we will have to upload our AFS, that's the audited financial statements. But when we started using it, we realized that there was not even any space for us to upload the audited financial statements. Instead, it was the tax computation that we can upload, and that is always an Excel. That is in an Excel, always in an Excel format, anyways. But then first day when I checked, I realized that they have now adjusted, and now we can upload, although we still have to compress the PDF to be able to, so that the platform can accommodate it. But still, it's an improvement. One of the signs that something is living is that it keeps on evolving, it keeps on changing. Even if it's bad, there are some things that it's better they change for the bad than they should not even change at all. If it changes for bad, then they still hope that it can be better, it can be good, it can be better. So I mean, the platform has actually reduced a lot of stress, especially on the part of the consultants. Now, I mean, gone are the days when we have to run from one tax office to the other. Of course, we still do that, but it has been reduced to a large extent. And okay, so I'd like to say this before I go. I'm still trying to connect my PC, please. I would like to say this before I go, because the best way to actually explain this is for us to file a particular taxpayer's account together, file a particular tax together, rather. So for that sake, I've taken permission and I've gotten an assessment that we're going to be doing together, so that we can all see the way it is being done. I'm going to share the screen of my PC with us, so that we can all see it step by step, the way it is being done. But one of the things I would like to say before, while I'm trying to connect my PC, is that, okay, please give me some minutes. I don't know why this.
While Mr. Ebenezer tries to connect his PC, now the taxes that we are trying to file today, in the course of previous posts, based on what I said earlier, that we post creative contents and others, we've actually talked about all this form of taxes in our prior posts. So anyone who is interested in actually getting an introduction or getting to know what all these form of taxes are all about, I talked about company income tax, withholding tax, and value-added tax. So anyone who doesn't really have an idea on what these taxes are can always refer to any of our platforms and check our posts that have been created earlier or that have created before. We have all of these taxes there. So this evening, they are going to be looking at a practical scenario of how these things are being done instead of just the theoretical aspect. It's going to be taking us through how the taxes are being filed and remitted using the TAXPRO-MAX platform. Before now, or in earlier years or in years behind, one would have to go to the FIRS office with loads of documents just to file maybe company income tax or any of these taxes for clients or even for individual businesses. But the good thing is, with the introduction of this platform, all those things are no longer necessary. From the comfort of one's home, you can actually sit maybe in your bedroom or at your comfort zone and file and remit taxes without any hindrance or disturbance. All you need is just a network connection, maybe on your PC or even on your phone. The platform is accessible via phone. So the platform now, it has a website. The website is www.taxpromax.firs.gov.ng. So I'm sure in the course of the session, Mr. Ebenezer is going to tell us things that relates to the platform and all the things that we need to know, how we can register ourselves on the platform, like that. So if there is anyone who would want to, or who doesn't have an idea on what these taxes are, please, you can just kindly unmute yourself and just maybe make an inquiry so that we'll know what to do, or how to just whether to give a brief explanation on what these taxes are before Mr. Ebenezer connects his PC and we get started with the training proper. Just as we said earlier, the taxes, they are remitted to FIRS, and the FIRS is the sole collection body for the three taxes or the three forms of taxes that I just mentioned. Now, the company income tax, these are taxes that are remitted by companies or businesses registered in Nigeria, and it has its own basis of computation, and it has percentages that accrue to the government at the end of each financial year based on the turnover of such businesses during the year. It has a rate of 20% and 30% respectively for businesses that have a turnover of 25 million naira to 100 million naira and above. 20% tax rate for company income tax for businesses that have a turnover of 25 million to 100 million in the course of the year. And for businesses that have over 100 million naira turnover are to remit 30% of their profit at the end of that particular year to the FIRS. Mr. Ebenezer.
Yes.
Your PC, is it connected now, please?
Sorry, just give me a few minutes, please.
Okay, while Mr. Ebenezer tries to connect his PC, now the withholding tax, just as I said earlier, we've created posts earlier on all these forms of taxes, as well as many other areas of our profession, and we give kind of personal development posts and many other things. We take on quizzes, we test ourselves, we test our intellect, and we try to upskill ourselves individually too. I said earlier that we also do have mentorship sessions just like this, but what instead of training, now what we do in such sessions is just mentorship, where we invite professionals to come talk to us, advise us, and motivate us to do well, do better in our various chosen careers or in our various roles, and how we can actually become better and attain career success. So I've talked briefly about company income tax. I was on withholding tax. I said withholding tax is a form of advance payment of personal income tax. It has different rates for different activities. Unlike company income tax that just specifies on turnover and the profit at the end of the year and gives a rate, the withholding tax actually deals with activities. For example, contract now has a rate for both individuals and business organizations, as well as directors' fees and many other activities like that, professional engagements, like that. So it has different rates. So Mr. Ebenezer is going to be putting us through how we apply those rates using the TAXPRO-MAX platform. Like the director's fee, it has a 10% rate for both individuals and businesses. For contracts, it has a rate of 5% for businesses and 10% for individuals. For professional services, I think it's 10% for both individuals and businesses, as well as other host of activities like that. Then for value-added tax, the value-added tax is a tax on selected services based on the second schedule of the Value-Added Tax Act. So the second schedule of the Value-Added Tax Act specifies activities that are actually vatable, or that has the VAT, that are VAT accruable. The activities that we are to charge VAT on, and the activities that are zero rated, and the activities that are not to be charged using VAT. Now, the rate of VAT in Nigeria is 7.5%. Initially, it was 5%, but the Finance Act 2020 increased the rate of value-added tax from 5% by 50% to 7.5%. So in the course of the session, we'll be talking about company income tax, value-added tax, as well as withholding tax in no specific order. It's going to be at the preference of Mr. Ebenezer. Whichever one he deems we should learn first is what we are going to learn. And in the course of the session, I've placed a post in the chat box. If there is any question raised, you can easily type it in the chat box while I notify the guest speaker to address such questions at the end of his session. Thank you all for your time once again as we get the program started. I'm sure it's going to be an educative and an interactive session. Mr. Ebenezer, are you with us?
Yeah, I'm with you. Thank you. Thank you for your patience, everyone. I'm so sorry for the delay. Okay, so basically, I'm going to be sharing my screen with everyone now. So I said I was going to say something initially before I left. So, okay, it's about the attitude that we should have as accountants towards technology, actually, because really, one of the things that actually gave me relevance, I mean, I joined Lawrence Away, it's not up to 2 years now, and one of the things I felt like gave me relevance was I have a very positive attitude towards this particular system of filing tax. And not just this, as accountants generally, I believe that we should have a positive, even if it is not perfect yet, we should have a positive mind towards anything technology. Because if you look around us today, every profession now, virtually everything is now being driven by technology. So for our own, look at, for instance, for medical doctors now, you see they have machines that is being driven basically by technology. They can now do x-rays, things that would normally take a longer period of time before now take in few minutes, few hours, they are done with it. And that is courtesy of technology. So as accountants, we should be able to appreciate, we should have this mindset of appreciating technology. For instance, while everybody will be talking about this, not to say that it does not have flaws, yes, like I said earlier, but while everybody will be criticizing the platform, why can't you see the good? Why can't you see where the platform is headed? Why can't you see the intention of the people that created the platform and see it as good? I mean, I've always had that kind of mindset, especially when it comes to technology, because I believe if you want to really last in this profession, if you want to be relevant in this profession, then you must be very, very savvy with tech. You must be acquainted with technology. You must be progressive with technology. So as technology is changing pace, you must also be ready to move with the pace of technology. So anything technology, I've just always had a positive mindset for it. And I believe every accountant should also be like that. Every accountant should be like that. Say, for instance, now, there was the first time I actually used QuickBook. I had never used QuickBook until that time. We wanted to do stock counts. And before that time, I mean, for a client, for a retail store that size, we normally use our hand, but it's normally take, like, for instance, at times weeks. So I just stumbled on something online, and I saw that we can actually use QR scanners, all these barcode scanners, to take stock counts, especially if the items have barcodes. So, and we did. And in fact, when my boss asked me, are you sure you can do this? I said, yes, I can do it. Because, one of the things I've come to understand is that the time that we are in now, information is very, very available, but people don't make use of the information. So when I got back home, I just basically saw some videos on YouTube, saw videos on, I checked Google, read, and eventually I was able to do it. I made a mistake at first, but in fact, what would have taken us like 2 weeks or a week to do, in like 3 days we're done, and we're able to update the QuickBook with the stock count, with the updated stock. So what I'm trying to say in essence before we go into this thing is that we should have a positive mindset with technology, pay particular interest and pay particular attention with anything that has to do with technology as an accountant. Yes, do that. It really helped. It has helped me a lot and it really helped everyone, I believe. So basically, I'm trying to share my screen now. Okay. Can everyone confirm? Can you confirm for me that you can see my screen? Can you confirm for me that you can see my screen?
Yes, we can see your screen now. It's visible.
All right. Thank you. Thank you. So,
yes, we can see you, sir.
All right. Thank you. Thank you for that. Okay. So, basically, the first thing to do is we want to let's take it from the CIT so that if time does not permit, I can just give an oral an oral guide to the way we can go about VAT and withholding. There's nothing really much with there is really no big deal with filing those ones. But let's just start with CIT, like I agreed with Mr. Yodeji and Mr. Idris. So basically, we want to go to the FIRS platform, the TAXPRO-MAX platform. So we do taxpromax.firs.gov.ng. So this was the manual the FIRS actually initially sent to us at the introduction of the platform. They sent this to us, but trust me, a lot of things that are on this manual are not on the platform yet. I believe they are still working on these things. For instance, one of the things that we thought initially was that especially for withholding tax, like I said earlier, that it's going to really aid withholding tax credit note generation and all of that. But now, even till now, we still filed for a client recently, and before we could use the client's credit note to offset the CIT, we had to go to their office physically. We were trying to do it. Eventually, we realized that the feature is not on the platform yet. So this is the TAXPRO-MAX landing page. So we want to log in. You can see. Okay, before I do that, log in, register, validate TCC. But for what we want to do, let's just want to log in into the client's accounts. So for instance, this is a client that have taken that have been granted permission to use. So this is one of our clients, and so the credentials are already there. So okay, so the first thing is when they introduced the platform, for consultant, for instance, now we filled updated forms for our clients and we submitted at tax office. So they sent mails to those clients, to the registered mails. They sent mails giving them passwords, sending them credentials rather. So the credential, the email address, and the password that the FIRS sent you is what we are going to put on this, put as your login details. Pardon me. So we can see this is the dashboard, as they call it, of this taxpayer now, the Wardrobe Ultimate Concept Limited. So basically, you can see the taxes due, pardon me, the concluded assessment, information board, the ledger balance, that additional assessment spending, the taxpayer details, group taxes, the credit reports, the process TCC. So if you want to see taxes that are pending, taxes that are yet to be filed, then of course you go to the taxes due. So after you have filed and you are yet to make payments, you are going to see the balance of your, for instance, if you have credit notes, if you have a credit balance, you are going to see it in this ledger balance. If you are filed and you have liabilities and you are yet to pay, it's going to show as a negative as well. This ledger balance is going to show as a negative. I hope hopefully we're able to finish this filing and then we'll see what happens to the ledger balance. So the group taxes as the withholding tax, the withholding tax for director and all of that here. The concluded assessment is where you see records of assessment that records of taxes that you have filed. Credit notes is what you should show, for instance, withholding on tax credit balance and all of that. So we want to file CIT. For us to be able to file CIT, it means that assessment, that CIT assessment for that particular year must be in the taxes due. So there are several instances where the assessment is not on the dashboard. Where the assessment is not on the dashboard. Okay, someone asked if the video is being recorded. I believe it is. Okay, so like I was saying, there are instances where the assessment is not on the dashboard, and we have to go to the tax office specifically for them to help us upload the assessment. So that happens a lot of times. So when for instance you want to file CIT 2021 and you cannot find the assessment there, all you just have to do is, if you have a contact, if you have someone's contact, I think that's the easiest thing to do. You can just put a call across. Okay, you are trying to do, of course, the request for the TIN of the clients, or if it's your company, the request for the TIN, then you provide and you tell them the particular assessment you are trying to file. If it's CIT 2020, CIT 2021, VAT, July VAT, all of that. So, and while you're on call with them, if it's someone that is not so busy at that time. So this is CIT so for this particular client now, their year end, their accounting year end is August. Like you can see here, the assessment period is 2021-08-31. So this is the assessment. So this is the range. So this status shows that the tax is not past due. That is, it does not pass deadline yet. So we are yet to file. We are yet to make payments. So what do we have to do? For instance, if you see this VAT now, the next assessment on the dashboard, you can see that it is past due because it is for when? It's for January. And it's for December rather. And so the assessment period is 2022-01. So we are past 21 January already. So basically, so what we have to do, we want to file CIT, just process. So we can see this pay on account. Pay on account is when, pay on account is when, for instance, you don't want to file yet, but you want to just make remittances. You are not yet to pay the entire thing. You just want to make, just like the way you do for manual filing, you can always pay on accounts. So that's what the pay on accounts is for. So, all right, so let's go. So for us to be able to do all of this, it means that we must have our audited financial statement already. We have all of the information. There's no way you want to do it. You must have your audited financial statements to be able to do the filing. So I'm just going to shrink this and then go to where I have my audited financial statements. So this is Wardrobe 2021. I'm going to open it with Chrome, and then I'm going to drag this down. When I drag this down, so it can help me to see it side by side, so that it gets faster, so I don't have to be shifting from one tab to the other and all of that. So the first thing is, as you can see, everything, because I've started working on this, that's why it ticked this as done. Everything is on X-axis, like you have not done it. So as you go from one stage to the other, it will keep ticking, so that you can see your progress. So the first thing is your revenue. I'm going to go to where I have my income statements on the AFS. So this is where I have my income statements. I'm not sure everybody can see. Where is this thing? Logging out. may not be able to see the, okay, I think you can see it. So, my time is fast then. So, I'm going to go to where I have my revenue for 2021 is 4,439,815. So I already have that imputed. So you have to click on your returning currency, then input your value, then you proceed. So the next thing should be your non-current assets. Non-current assets. So non-current assets, just like you have it in the manual filing as well. So this addition allows you to input information of the asset of the client of your company, as the case may be. So we have the status, we have the asset category, we have the description, we have the purchase date, we have the cost, we have the rate. Because this client has not used this platform for filing before, we can see that it has 0 entries. So it means that this is the first time we are filing for this client. So for instance, if we have done for 2020 initially, all of the data that we have for 2020 for the non-current assets will already be there. So all we just have to do is if we have addition, then we can put our addition, but it will already be there. In fact, the depreciation will be there already. Everything will be there based on the previous information that we have imputed, previous data that we have imputed. So what do we have to do? We want to file our non-current assets. So we can see here, item on list. So how do we add? We just basically go down. Is it a tangible asset or not a tangible asset? We can see tangible assets. So we'll go to tangible assets. So I'll just basically quickly take my AFS as well to the place where I have information about my PPE schedule, especially. So please, if you have any questions, just note them so that when I'm done, we can take all of the questions together. So this particular page is actually very, very important. This page of the notes to the accounts is very important because it tells us what is the rate of the depreciation, and that is going to be needed as well. So we see that we have 2.5% for all of the assets, all of the PPEs. So this is the plants, property, and equipment. So let me rotate it so that it can be better viewed. Okay, so we see that the first thing on this PPE schedule is the building. So we have building, industrial, building, non-industrial, we have mining plants, we have classifications here. But if you feel like what you are trying to do, the data you are trying to input is not here, you can just basically go to orders. Then orders allows you to use your discretion and put what you feel like best describe what you're trying to do. Then I've inputted building here now. So description, I'll also put building. Then when was it? So basically, for this particular AFS, like we see, we did not have they did not tell us when the asset was acquired. So how do we want to calculate our accumulated? How do we want the system to calculate our accumulated depreciation if we don't know the date of acquisition? So basically, that's the reason why I said it is a plus for if you are an accountant, you'll be able to manipulate, be able to please, if you have any question, don't post it for now. Just maybe note it, so that at the end of everything, we can take all of the questions together. So what do I do to be able to know, okay, when was this asset acquired? Yes, I have the balance brought forward for the accumulated depreciation. I have the depreciation for the year, and I know the rates. So basically, it's just for me to take my calculator and then do a simple calculation, and I should be able to know, okay, when did we start to depreciate this particular asset? So for instance, for this building now, we said that the rate is 2.5%. So 2.5%. 2.5, what's my calculator? So 2.5, that's 0.025, pardon me. times 0.025 times what is the times the cost. Okay, so we see that we have addition. So the entire thing was actually, this is wrong. I didn't take note of the addition. So this is the entire thing. So I would have 38 200 times 0.025. So we can see the way we arrived at this particular figure. So what do we then do? This is the depreciation. This is balance at the beginning of the year. So it means that we can just basically divide this with the depreciation for the year, then we can see the number of years that we have been depreciating. So 6160. Because of our time, I'm just trying to explain this. It will be very, very useful actually, because 952. So for the other ones, I won't go through all of this process. What have I done? So okay. Okay. This actually, okay, if you look at this very well, this particular one does not have the addition, because at the beginning of during the year there was a massive addition of 35 million naira. So you have to look for the depreciation for this, then use it to divide this. Sorry for that. 0.25 times 3. So 7,080. So we have cancel 616. So see that this asset has been depreciated for 8 years before the addition. Before this addition of this thing. So 8 years since 2021 will be, since 2020 rather, will be 2012. So we know how to add our assets. So let me just refresh this, because I'm very sure it's going to probably go back. So that we can. That's one of the issues we face with this step. So I hope we get that manipulation already. So we can basically just go from there. For the other ones, I will just go like that. So I won't go through the calculations again for the other ones. That will take a lot of time. So for the addition, we have building. We have the building. We have the building. We said others, then we said building. So let's have building as well here. So let's go to 2012, because this asset has been depreciated for 8 years. So let's say January 1, 2012. Then let's have the cost. The cost is 3. Supposed to be accurate now. So let's just 200. Then we'll put our rate here. Our rate is 2.5%. So we add record. So we can see that we already have this imputed already. So we'll go to the next, this next asset on our PPE. So we'll go to, this is an intangible asset. So we don't have anything like that that describe CAD/CAM software or websites here. So let's just go to others and then type what we have. CAD/CAM software. So let's just say software for this. Software. Let's see. I'll say have to be everything. Let's just say 2012 for this one. Let's assume 2012 for everything. I went to the first one so that we can see, even if the financial statement does not have, okay, so how do, because it's very, very important that the system will not automatically calculate okay, of course, it will calculate the accumulated depreciation, but it will be based on the date of acquisition that you have put there. So, so what's the cost now? 3, 4. There we go. 4, 5, 3, 2.5 as well. I don't know this. So basically, that is how we go. That is how we go through the selling intangibles. Let me just do this two, then we'll move to the next thing. I'll come back to everything and do it properly. So we said card cam. So this it. Because of our time, I have to get back to the class. So we said software. So this one is 2012. So January 1, since we don't have a specific dates. So it has been depreciated for 8 years now. So we said this is 3083, 45. Already saved? Yes, already saved. So 2.5, that's the rate. So I want us to notice two particular things here. You can see that for the two items that I've added, they can see there's the remove, things that we can still remove it. We cannot edit, but we can remove and re-enter. Then we have the depreciation value. This is where you can either manually input the depreciation for the year, or you allow the system to calculate it for you. And I'm going to show us a way to do about this. And I think this is honestly one of the weaknesses of this particular. To the tax person, it's not be an issue because eventually they are going to disallow your depreciation and allow their capital allowance. So I think we can let's just proceed. So before you can proceed, let me try and proceed and you see what will happen. Before you can proceed, it will not allow you to proceed. You see the response now. You see the response. You have to enter the depreciation value for each item. As for those with nil or zero, you are expected. So the reason why it cannot proceed is because we have only imputed the costs, the rates. We have not imputed the depreciation value. So what do? Just go to depreciation. So I want to compare what I have here with what I have on the AFS. So what the system has calculated is this. What I have on the AFS is this. So it is the same. So I'm cool. So I can just basically copy that. So this is where you enter your depreciation manually. You enter it manually here. But if you don't want to enter it manually, you can just basically proceed. When you press proceed, it will automatically update the depreciation itself. So so I've copied this particular value now. So I'll just paste it here. So the value is pasted there already. So instead of doing that, instead of adding that, I can just basically proceed. And it's automatically, so it means that I'm consenting with what the system has calculated for me if I proceed. I'm consenting with it. So, but if I do not consent with it, I have to input my own manually. So it shows that what the system computed for me is not correct. So for the building now, we have done for the software for the building. For the building now. For the building now, the same thing with our building. Let's see if it conforms. Yeah, it conforms 952080. So we are cool. So where that particular knowledge is actually very important is where you are now filing when you are filing for when you have filed before and then you are now filing for another year. Now when you are filing for another year now, the details of the assets, for instance, the PPE would have already assets would have already been there. So when you want to do the depreciation, it depends on your policy, but you cannot tell the system that it is on maybe reducing balance or it's on straight line method. So the system just basically puts the rate on the cost, and that is the system is straight line. So for instance, if you now want to make sure that it conforms with what you have in the AFS, you have to input it manually. I hope that is clear enough. So you can see that the depreciation for both items are now on the system. So we can just proceed. Now it will allow us to proceed. So you can see that we still have some other asset, but I'll come back to do that for the sake of our time. And we are already running. So where do we want to post our depreciation to? Some will say they want to post the cost of sales, some to the operating expenses. So basically, I'm just supposed to amount of operating expenses. And if your AFS states where to post it in the the accounts, just basically follow what you have in your AFS. So your audited financial statement, that's what I mean by AFS, by the way. So if you want to share it, 50% should go to cost of sales, 50% to operating expenses, but let's just have 0% to cost of sales, 100% to operating expenses. So proceed from there. So we have the current asset now. So I'll just quickly take my AFS to where I have my current assets, pardon me. So that will be my balance sheet or statement of financial position. So this is my cash flow. This is my income statement. This is my balance sheet. This is my sheet. So I have my inventory, and the inventory it is in second. It is in its 12. It is in the notes where it is in the note is number 12. So basically, you can maybe refer to the note to know the nature of the inventory. Maybe it's a raw material, maybe it's a whatever it is. You can basically do that. But for me, for the sake of time, I'll just include the value 650. Then I add record my inventory. For my inventory, then I go to my trade or other receivables. On my audited financial statement, now I can see that the next line item is trade and other receivables. So I have trade debtor and other receivables. So I mean the same thing. I'll just basically 987,650. I'll add it. Then I'll come to my cash and cash equivalents, cash and bank balance. Same thing. 182,934. I'll add it. So I'm done with my current assets. I want you to notice that when I want to add, I did not go to proceed. I was using add record because I still had line items that I wanted to add. But once I'm done and I want to proceed to the next stage, I'll simply press proceed. Click on proceed rather. So congratulations, you are done with the current asset. Continue with cost of sales. So our cost of sales now, we have to go to our income statement. If you want to see the breakdown, we have to go to our notes to the account number 5. But for the sake of time, I'll just basically run down and see that it is my other direct costs. And I'll say that it's a finished good, it's not a work in progress. So I'll just input the entire thing. 3,196,67. But I would advise that you okay. Can you still hear me?
Yes, Mr. Ebenezer, we can hear you.
Thank you, sir. That particular thing can be very frustrating. Like it's the system logging itself out can be very frustrating, but it is what it is. Add record. Yeah, proceed. That was where we stopped. So for our other income now, we go to our income statement. Do we have anything like other income? No, we don't. But if we do, you can see the classification here. If is in your own AFS, what you want to impute, then you can others if any. Just basically edit and give it the heading that best describes what you're trying to do. So we are in our operating expenses now. So basically go to, if we stay in this income statement, we may not be able to see the full gist of, so we have to go to disclosure in our note to the account number 6. So just run down to the place, note to the accounts, number 6. Number 3, number 6 should be here. So selling, wages, and administrative expenses. So we have management and technical fees. Items they have, the headings they are put there does not really suit me. So eventually what I have to do is I just proceed and then go add my own one after the other using the order. Interest on loan. I have this. Rents, yes, I have rent. 2.25 million. So it's a building. Lagos, office purpose. So this is 2021. So let's see. They started 2021 and it ended. Started 2021 January and they ended December. Just to make it a year, since I'm sure the clients. So how much? So that's why we impute this one after the other, one after the other. So you can see all of this I have to impute. But what I do at most of the time is that when I realize that some of them are maybe like the figures are not so much, I just sum those ones up and then put it as other administrative expenses. So let's see, for instance, most of the time the rent will always be large, the value will always be large to some extent. So I always put that. So for instance, this salary and wages now, I have to put it separately. This marketing, I want to put it separately. These innovations, I want to put it separately. But all this 41,650, I'll just sum those ones up. This is depreciation now. Of course, depreciation is already there itself. So I'm not the one that's going to input that one. It's going to just take data from non-current asset and then put it here. So I'll just sum all of these ones up and put them as non-current other operating expenses. Pardon me. So let me just proceed. Just take us to the next stage. I believe all of these ones should be clear. Okay. So right now, operating expenses. So let's just go there directly. Okay, so rent, we imputed rent already. Okay, so it's already there. So let's just proceed. So this is the rates. So if you have rates, put it. Continue. Directors' emoluments. You have the information, you impute it. Donations, you have information, you impute it. Professional fees, for instance, the auditor's remuneration will fall into this category, but look at the figure, so little so. Let's go ahead, Jerry. So other deductions. So these other deductions allows us to impute those ones that the headings that they are provided in the platform, those ones that the headings is not perfectly described or we feel like it does not suit what we have to input. So we can easily just, in a flexible manner, input all of this. For instance, I'll just see my salaries. You can see it's already there. Salaries and wages. So I'll say it's 3 million naira for the whole year. Is this 3 million? Yeah, it is. So I'll just add record. Let me just continue. I believe you can see the way we add record. So we add this one, particularly like that, this one. So for the other ones that have like immaterial figures, like not really material, but something that you can see aggregate and put, just aggregate them and then put them as other administrative expenses, and you can move ahead. So just proceed. Just proceed. So once you proceed, you see the summary of everything that you have put here. For instance, we didn't put anything for management expenses. We didn't put for anything for interest expense. We didn't put anything for commission paid. So basically, we inputted for rents, and that's what we have here. So we'll see the total here, total operating expenses. Most of the time, this will still remain zero. I mean, I've tried it on more than one system, and it's always zero. So what you just have to do is just proceed. Don't worry, just proceed. But be sure that you pay attention to the whole thing when you are done. That you are not in a hurry to just click submit, because once you submit, you cannot go back to edit. Once you upload your AFS and you submit, you cannot go back to the. So this is my current liabilities. I'll just basically go to where my current liabilities are, just like I've done for the other ones. I will add, if I have accruals, I'll put the figure here. Bank accounts payable, I'll put the figure here. Bank overdraft, I'll put the figure here. Short-term loans, I'll put the figure here. Proposed dividend. Like if I have, for instance, ones that are not described by all of these headings, I'll just basically go to order, type it out, and then put my figure here, and then I'll proceed. Let's proceed for the sake of our time. So long-term liability is the same thing. You have the venture, director's loan over 1 year, all of that. You add each item line by line, then you proceed. You add the record, then you proceed. Then the ownership structure. Let me do this so that the ownership structure, because so I will have to go to my balance sheet where I have my equity information. So if I go to the accounts, if I go to the account, we'll see that the authorized and the listing will most likely be the same thing. So this is 5 million issued and authorized share capital. So what do I have to do here? I will go authorized first of all. It's a local equity, and I'll put 5 million as the value of the shares. This is 500,000 after I don't know 0. 5 million as the value of that's authorized. Then I add record. And before I can proceed, I must also give the system an information that they are all issued and fully paid. So you can see issued and fully paid. Yeah, so they've all been subscribed. So 5 million. Then you can see that before I added that, this total was still 0, because what the system actually really reckons with is like the amount that has been fully paid for, like has been issued and fully paid for. So we have now the total is now 5 million authorized, issued, and fully paid for. So continue. So now we are done with that part. So the other part of the equity is the reserve. Now the equities are ordinary share capital and our reserve. So the other part of the equity is the reserve, like we have it here. So we have our retained earning. Our retained earning is negative 2, negative 2, 8, 3, 5, 7, 5, 8, 2. Okay, so that I also have time to take questions, because that's very, very important. So yeah, this is our profit adjustment, just like the manual file, the tax generally they will disallow some expenses then allow their own capital allowance and others. So basically, they will add back one of the disallowable expenses is our depreciation, amortization, and depletion. So they will add back our depreciation. This is our depreciation for the year, after depreciation for the year. So they will add it back. Then, once you confirm that this figure is accurate, that is the figure of our depreciation and amortization and everything, and depletion and everything we have imputed, we then proceed. Pardon me. Let's go through this all over again. So we have the balancing adjustments. So we have the balancing charge. If we have balancing charge carried forward or balancing allowance, so those basically inputs using add record, asset name, description, adjusted amount. Then you continue. Loss relief. If you have loss relief carried forward, maybe you have made loss in the past, and then you still have the relief from that loss being carried forward. Basically inputs here. Proceed. Then the capital allowance. So you can see that we did not give us any capital allowance here. So one of the things that I used to make sure I do is because once we want to file like that, we'll prepare the AFS, then we'll also, once we have the AFS rather, then we'll also prepare the tax computation. And the tax computation is where we break down ourselves, use the tax loss, and then we calculate our capital allowance ourselves. So we want to compare, okay, what the system is actually computing, because this is a very key part. This is as important. The same way depreciation is important to us as accountants, is the same way capital allowance is important to the taxman as a tax professional. So you want to be sure, because if this is not accurate, it means that the accessible profit you'll be having eventually will be different from what you have declared in your AFS. So you want to be careful. So you want to check, okay, you want to go, for instance, if it is different, for instance, one of the things I would do is, okay, we want to go through our tax computation again. Okay, what have we done? Have we used the right rate? Have we applied the appropriate law? And okay, is it a problem with the system? So you want to compare. At first, maybe may take time, but as you go on, you'll be able to easily figure out, okay, the problem is with the system, or the problem is with the tax computation. So you want to, but make sure you compare. Make sure you compare because of the sake of your accessible profits. So after we are done with that, just basically proceed. So these are accessible profits. Then just proceed. So once we stay too long on a particular page, it logs out. I don't think it's normal thing because it doesn't do that early in the morning, at the earlier hours of the day. So it does that maybe. So let me go back to our loss relief so that it can be clear. These are loss relief. So I've explained this, so we have loss relief carried forward. Brought forward. So the capital allowance, that's the last thing. So you can see that we are done imputing all of course, I will still have to go back and do the proper, for the sake of our time, we just have to run through some of the things. So you can see that we are done imputing all of the pages. Like we have done our revenue, we have done our non-current assets, we have done our current assets, we have done our cost of sales, we have done our other income, till our capital allowance. So the next thing now is to see our company's income tax form. Now, I want us to pay attention to something. Initially I said that The operating expense, even though what we imputed for rent at 6.25 million, but the total that it was still compulsory for us was 0. And I initially thought that it was a thing with my system, but I tried on several other systems and I realized that it is still like that. So you won't want to do that, because if you do that, I mistakenly submit, I do pay attention. The implication of that is that your profit will be overstated. So you want to go back to your operating expenses again. So let me just show us what I'm talking about. Let's just go to the form. The form is like the summary of the whole thing that we have done. So this is the revenue that we have. So you have the opportunity of going through everything again at a glance. Now at a glance. So now you can see that our operating expenses is not supposed to be 0, but it's 0. But if you don't pay attention, this is what you would have declared as your accessible profits. See. Where is it now? See total profit here. Accessible profit. This is what you would have declared as your accessible profit. Meanwhile, that is not true. So you have to go back. You have to go back. Although this for this client now, since it is 2021, we are filing for, and the profit is just 2 million, there is not supposed to. There won't be any tax on it, and it's not past deadline, so there won't be any liability. There's not going to be interest or penalty. It's just going to be 0. But still, let's go over it, because the law does not say that you should not file, and you should file inaccurately. The law says that you should file. The only thing that you're going to be exempted from payment of tax. So I want to go back again. I want to just go back to where I have my operating expenses and click on the whole thing all over. So what you have to do is you just have to run through everything all over again. Just click on the whole thing all over again. Just proceed. Okay. Proceed. So these are rents. At least these are rents here. You should have at least shown, even our depreciation, nothing is showing there. So proceed. Wait, we didn't put anything. So proceed. Proceed. Professional fees, proceed. So get to the last page. I'm doing it all over again. Other deductions, I think that's our last, salaries and wages. So now we can see that we have our rents. We have, initially it was all 0, but we can see that the total is now there. Total is now there now. So we now have our orders, which is our salaries and other distinct salaries and wages rather than our depreciation is also there now. Our depreciation is also there. So basically, you can then proceed to save the record. So when you are done with that, once you are done with that, since that's the only thing you want to adjust, you can basically go back to your assessment home, click return to assessment home. It will take you back to, you can go to your form. Let's see if it will have added it to it. So now we have a very important, because it has implication on your profit. That's what I'm saying. Of course, you will know, but the reason why I went about it like that is that you may not know how to now go about it. Because why is this thing like this now? I imputed your operating expenses now. Why is it now 0? So what you have to do is just to go over everything again. So basically, you can now click on submit. You can see that amount to be paid is 0 because our accessible profit is less than 25 million. According to Finance Act 2019, if it's less than 25 million, you are free from CIT. If it's between 25 million and 50 million, then we are going to place a rate of 20% on your accessible profits. And if it's between, am I saying the correct thing now? Okay. Am I right? Yeah. Yes. Someone wants to say something. At 20%, I think. Then between 50 million and 100 million is going to be. Sorry, can that person means between 50 million and 100 million? I think it's 25%. Then above 100 million is 30%. If I'm correct.
Yes, you are correct, sir.
So, thank you so much for confirming. So then we click continue to declare. Normally, if you are not sure, or if you are not yet to, if you are before you can submit, let me just put it that way. Before you can submit, you must be sure that everything that you have inputted on this system is accurate. It's accurate. You must go over it again. You don't want to make a mistake, because once you go to that submit, if you have a liability, it's based on the information that you have inputted that is going to, is based on that invoice will be raised for you, and you won't be able to go back again. So submit. Submit here is not the last thing. It's not the last page. You still have to upload your. Initially, it was tax computation that we were uploading, but now they said they have updated it. It was on Friday. I saw that we can now upload our AFS. So why is this thing doing like this? But let me just go over. People are already giving them. Let's be fast. So that people not just miss out on the entire thing. Okay. So submit. Okay. Submit. So you can see that now audited account. So the issue I have with this particular update is that, say for instance, for companies that have very large audited financial statements, how do they expect it? Because even our own, because for it to be called audited financial statement, it means that it has been endorsed. It is available to the public. That's what it means. And normally, before you, even during the time of, even after you are filed online, even now that after you are filed online, you must go and submit the hard copy of the audited financial statement. Some tax offices will say that once you are filed online, just bring evidence of your filing, maybe a printout of the summary page or something like that. But what I'm trying to say is that, for instance, for banks now, that they have very large financial statement. How do they compress their PDF to be lower than 1 megabyte? So there might be instances where, for reasonable, where we have financial statements that are large, and all of the information therein are very, very important. Except they want us to be preparing audited account that is specifically for, that is just the information, but that doesn't make any sense actually. But really, what I just did for our own was I compressed the file. So this is our file now. But I'm not going to upload it, because once I upload it, I won't be able to go back and edit anything again. I won't be able to go back and edit anything again. So what I just do is, normally if I want to upload, I'll just drag my file down. I'll drag my file down to where I have my. Sorry. Okay. If it's not doing, system is hanging. The other alternative is just go to where. Okay, I can just basically easily do this. If my system is hanging. Pardon me, please. Okay, let me just go back. So I can basically do this. I can basically just bring it from here, compressed, and come and paste it here. Alternatively, that is taken. I don't know why they stop using that. Let me just select from here. It's fine. So since I'm done with the AFS, I can do with that and expand my screen, maximize my screen. Let me just give this time for the system to respond. Okay. So I want to go to where the this thing starts. I don't know why this system is doing particularly like this today. Okay, so should be there. LDP site. So please pardon me. So let me just exit that. Now we have a lot of tabs open now. So where is the end? Okay. Let me just maximize this first. Okay. Then normally I would have just dragged this. So you can see that I've compared. Normally the size of this thing was because we scanned it, and that's the normal thing to do because there are some part of it that directors have signed, some part of it that the company have applied their seal and all of that. So there's no how we do that and not the only option we have is just to scan it. So we have to so that's the reason why the file is this large because audited financial statement has been endorsed. That's the main. So I have to compress it to this so that it can just be lower than 1 megabyte that is being required. So I'll just drag it and come and put it here. And once I do that, I submit. I won't be able to alter it again. So once I submit, I have penalty to pay. It's just basically take me to the sort of invoice page where it's going to list out, okay, this is my CIT, this is my EDT, this is my, if I have technology tax to put it there, if I have penalty, if I have interest, so just put it there, and I'll raise my invoice. I'll choose this thing. But I believe that from this point, particular points, everyone should be able to go ahead with the other stages of this thing. I mean, this is 90% already. Just the remaining stages is just the remaining pages is just to the first one I think is to give a summary of the payments. Then the last page is to raise the invoice. And you can either pay online using remitter, interswitch, and I can't remember the last one now, or print out your invoice, download your invoice, and go pay at the bank using either remitter or interswitch. So this is for CIT. For VAT, with everything that we have done, VAT should be very, very simple. Withholding is the only thing I feel like if you have time, some other time can go through withholding together. Because with the withholding, now you have to download a format of the withholding tax schedule, and you have to input your own information, then upload back and all of that. But if you can just try it out as well. There's no harm in trying something out. So basically, this is how far we can go with the CIT, and I'll just go back to home now. So before I take questions for just a few minutes that will allow for questions, I want to say that as an accountant, before you can, of course, I know that one of our professional code of conduct is professional due care, and what is that code now that talks about you not taking up and competence? Yeah, you not taking up the job that you cannot do. But of course, there's that are not competent, they are not capable of doing. But before you can see that, for instance, you are within your company now, you are not working with a client. Your upline is telling you, "Can you help us do this thing?" Before you are quick to say that I cannot do it. Pause a little bit. You can even tell if you tell the upline that yes, I will get back to you on this part. I mean, that has always been my response. That's always been my response. There are a lot of things that I tried out. Of course, at the first instance, I might make mistakes, but trust me, trying the second time, third time, I won't make mistakes. The worst thing is I'm always used to that stuff. And thank God my phone is very, very fast. In fact, I use my phone as router. That's why I connected to my system now. It's very, very fast. So before you are done talking, I've typed it on Google and I've researched it. Before you're done talking, especially when I'm not together with that my upline that is talking to me about that particular thing. Before she's done talking to you, I'm on YouTube already. I'm seeing a video about it already. So as an accountant, especially in this age that we are in, before you are quick saying, I cannot do it, and I'm very sure for some people it's mostly laziness that causes it for some people. It's because they are not just ready to stretch. But before you can say that I cannot do something, wait, type it on Google, check YouTube videos. And when you type that, you will see a lot of YouTube. A lot of people are looking for a way to make money on YouTube. So you will see YouTube videos that will explain what you need. I'm not discouraging people asking questions, but I feel like when you want to ask an offline question, and I'm not discouraging everyone. Okay, let me just take the question before I explain what I'm about to explain. So, Mr. Idris, this is how far we will go with the CIT.
Mr. Beneza, thank you very much for the training. Yeah. We all have learned a lot this very evening on the usage of filing company income tax. You've not only trained us this evening, but you've motivated us to embrace technological advancement. Thank you for your time and thank you for everything that you've done for us in our community. So take a brief look at some of the questions in the chat box and see what the ones we can treat before we call it a night. Someone is asking or making inquiries on filing returns for non-governmental organizations. I'm sure non-governmental organizations file taxes too. So, Mr. Ebenezer, what do you have to say regarding that? Is it still the same platform that we use in filing returns for non-governmental organizations, or there are other ways around it? Mr. Ebenezer, are you with us? Okay, I guess Mr. Ebenezer is having issues with his network. Before he joins us, I would like to maybe take a recap now on the things we've learned this evening. The major thing we've done this evening is a recap now, a training on filing of company income tax using TAXPRO-MAX. He explained the procedures for us, but one thing that we have to know is for us to get our login details, or for any business to get the login details for us to gain access into the platform, one has to visit any office of FIRS nearest to him or her to get himself or his business enrolled on the platform. That is very necessary. We can't just impute our email or anything there and it just takes us directly to our tax view and the likes. We first need to get registered on the platform. And how do you get registered on the platform? It's by going to any FIRS office close to you and get yourself or your business enrolled on the platform. Mr. Ebenezer, are you with us now? If anyone has any question to ask, you can easily type it on the chat box there. So when Mr. Ebenezer gets back to us, he can treat some of the questions.
Okay, Idris. What's the question on NGO? I think I'll answer. Any other question I'll answer. It's not available.
Okay, the person is trying to make inquiries on filing of tax returns for NGOs. Whether it's still the same procedures that would follow in filing company income tax for NGOs or any other form of relevant tax for NGOs, or there are other ways to go about it. I guess that's what the person is trying to make inquiries on.
Okay, that's fine. That's fine. So basically, any company that is registered with CAC and FIS.
Sorry, I was off for a while.
So basically, any company that is registered with CAC and FIS is responsible for collecting a tax. So they have to file through the TAXPRO-MAX solution. So basically, for now, the taxes NGO file are personal income tax, that is for the payee, any vatable transaction, and I think they have withholding. And they should also file CIT despite they are exempted from CIT. But I think the FA 2021 talks about those educational. There's some NGO that carry educational activities. So I think there's still an issue here talking about educational activities are being should be taxed currently based on the Financial 2021. But as long as the business is registered with CAC, is operating in Nigeria, so any taxes that FIS is responsible for collecting, they should file using the tax pro-max. If it's for payee, that is for you have to use the LRS of that state. I mean the internal revenue of that state. So for Lagos, you have to use ELRS tax for filing of payee for the company if the staff are residents in Lagos. So I think the same also should apply for other. Um, I think that's the answer to the person's question.
Oh, thank you so much, Mr. Ayodeji. I'm sorry I was away for a while. I hope I did not miss anyone's question. So, Mr. Idris, are there questions that I have to take before I go? Mr. Idris, are you there?
Can you hear me now?
I can hear you. I can hear you.
Okay, while you were away, Mr. Ayodeji helped us in treating the issue of filing tax returns for non-governmental organizations.
Okay.
Now, asked by Mr. Oluwadunsin is asking whether the tax pro-max recognizes the company's net book value, that is in, I think, in the assets aspect now, or it's the total written down value. That is in addition to assets.
Okay. Okay. Yes, it recognizes net book value actually, because once you are filed for a particular year and when you want to file for subsequent years, the value you are going to be seeing will be the value that is net depreciation. The system is going to be going to reflect the cost. It's going to reflect the written down value. I'm not sure. I don't know if I've answered that person's question. So, for instance, if you are trying to file for that particular company or for that client for the first time, you have to input. So you have to be the one to input the cost, You have to help the system to calculate the accumulated depreciation, then the depreciation for that year. But subsequently, for subsequent years, the system will automatically update to net book value.
Okay, thank you for the response. I think that's all the questions or the inquiries we have.
Okay, all right. Thank you so much.
I don't know if any other person has any question to ask. If there's any question, can simply chat us up in the chat box so that the guest can respond before he goes. But in the interim, while we wait for questions, or in case if there are no further questions, I want to sincerely thank everyone who have taken out part of their time to be with us this very evening to learn part of the processes or procedures of using this platform with us. Now, going forward, I believe that I would sessions on withholding tax and value-added tax, so I will gain first-hand knowledge on the usage, or a practical knowledge, just as we've gotten on the filing of company income tax. I believe that we should also gain practical knowledge on the filing of value-added tax and withholding taxes. But due to our time, we'll be calling it a day with the company income tax alone. But in the nearest future, I believe we'll host another session for value-added tax and withholding tax. So anyone that has any contribution to make can actually unmute him or herself and talk to us before we call it a night.
So, Mr. Idris, you permit me to go now.
Okay, thank you very much.
Yeah, thank you so much for having me on this platform. It's a privilege. Thank you.
Yeah, it's a pleasure having you on this platform this evening. Thank you very much.
Thank you so much. Yeah. Bye.
Yeah, request. Okay, and that will be it on this edition of Meet and Chat with the Professionals. My name is Idris Abubakar Aliyu, and I have been the anchor of this particular session. Thank you for making it a time with us. We'll get to see you some other time.